This is the TIFI token 1-year overview reading for the year of 2025. It's currently March 23rd, 2024, 5:35 p.m. Eastern Time. TIFI token at the time of this reading is there's 7 zeros after the decimal point, and then that's followed by a 3626, and that's in USD. The shuffle video that we're about to play, or the shuffle video that's playing for you in the lower left corner of the screen, was actually created back in February 18, 2024. But since 2024 started, we've just got so many orders. It's like our waiting list is getting longer and longer. And there's a process. We do the readings in 3 steps. So the first step is this photograph, and then there's the markup as a second step, and the third step is editing and posting. Recording, editing, posting. So we're getting to the recording, editing, and posting here on March 23rd. That's how backed up we are. Either way you look at it, 2/18/24 or 3/23/24, either way, we're still well ahead of the 2025 time period that we're predicting. Now, the overall theme and behavior for TIFI in 2025 is a notable resistance level. There's a resistance level that's highlighted on like a multi-year scale. It's a resistance level that we failed to break through many times before. Either that or we failed to break through it many times during the year of 2025, or both even. It's crossed with us. We successfully turned resistance into new support. So that same resistance, at some point or another, we turn it into support. And then there's a sharp drop, like a unicursal hexagram kind of drop off of that, like after creating support, we then break back down through that price level with a sharp decline. And we see that happen at least once in the year of 2025. Behavior around the highest high for the year, we have a decline to and through support to meet another support. That's on like a 1-year chart scale. We bounce along that support sideways for a bit throughout the year, and then break down through more supports into the low. Behavior around the lowest low for the year, we have a notable move on a 1-year chart scale to the upside out of the lows. Now, before I get into the week-by-week chart behavior and the timing of the highest highs and the lowest lows through the week, just want to make sure that everybody is aware. The whole purpose of the channel is to transmute some of the competitive energy of the stock market into goodwill. We do that by following the rule of karma for the channel. You go to the resources tab of our website, Tarot for Traders, and 5% of the profits from every profitable trade utilizing this information should be donated forward to one of these charities, or pick a charity of your choosing as long as you're paying 5% forward, and then 5% should be sent back to the channel through one of these links. If you're international, you can use Wise or you can use YouTube Tips. And that leaves you at 90%. Make sure to spend that 90% out of love. As long as you follow those rules, you follow the rule of karma for the channel, the universe considers you an angel investor. It's going to send it back to you tenfold for following through. Blessings to all my angel investors. Let's get back into it. Now, understand, guys, we're predicting the sequence of chart events, and that's the most important aspect of the prediction to follow. The timing is almost always on point. Like, we're in the 90s, the high 90s usually on timing. Sometimes you have to give the cards the sequence of events for the timing plus or minus 2 weeks of wiggle room. It happens occasionally because not each card's energy will line up perfectly with 2 weeks of time, and that's what each card basically represents. So it's important to understand that follow the sequence of events as outlined by the prediction. You'll stay on track in cases where we're off a little on timing. Now, in the early part of January, we have this big move to the upside. This will either be out of a price level that acts as a lowest low thus far, or we see a lowest low thus far in the later part of January. Hard to say, but there's this big move that will really stand out on a 1-year chart scale in early January, rallying into a January high about mid-month. There's sideways rotation followed by a big move, establishing support, followed by a big move higher, and then sideways rotation establishing support at a higher price level near the high January high. And then the later part of January, we have that key resistance on a multi-year scale that we failed to break through, highlighted, and we decline pretty notably to and through support to meet another support on a 1-year chart scale, and then we rotate sideways along that support. There is a breakout to the upside. There's a breakout to the upside in the third week, around the third week of January. I don't think from a lowest low, but from a trough. And then in the early part of February, we have in the January low forms when we have this rally into key resistance on a 1-year chart scale, and we break down from that resistance with consecutively lower spikes up on the way down. We usually have moving averages in bearish formation. A sideways fluctuating rally in early February that precedes a notable decline. There's a trade opportunity there in early February and another trade opportunity at the February high. I'm going to talk about those trade opportunities in more detail in the paid version. We're going to get into what the general timing, like to the week, and then what type of chart behavior to look for entry and exit into and out of those trades, as well as what trades to avoid and any price level information, all in the paid version. We'll get into that in more detail as we progress. But off of the February high, which is a prominent peak on a 1-year chart scale, there's a notable decline. The Ace of Cups indicating that we likely see the same price level of the February high in the not too distant future, either that or a higher one in the not too distant future. But we decline off of the February high, and then there's an important price level where we kind of flatten out sideways. Important on a 1-year chart scale, we kind of flatten out around that price level. There's like some sort of price change, and it kind of like subsides at a trough in like the 3rd or 4th week, probably the 4th week of February. February low forms in a period of bearish price swings and or a really sharp drop. Right at the beginning of March, there is well, that one's tricky, but there's a sharp drop in like the first week of March. The overall though for March, in the early part of March, we have a big move to the upside, pushing the upper end of a range higher on a 1-year chart scale. So it's probably a higher price level than what we saw for the February high. There's a notable move for the March high. We have sideways rotation, establishing support, and then a big move to the upside on a 1-year chart scale, taking us into the high. And the later part of March, we have another trade opportunity, and there's a significant reversal will really stand out when we look back at 2025. It'll really stand out on a 1-year chart scale. Near the March low, we attempt to establish support. It looks like there's a lot of volatility near the March low. It's probably the same low that we have in January. Yeah, it's the same low that we have in January, and we're attempting to establish support there. There's also a pretty big move to the upside somewhere in the later part of March. Again, there's a big reversal there, but there's also a notable move to the upside somewhere on a multi-day scale in the later part of March. My sense is that the February high, it's probably in the earlier part of February. The March high, probably in the later part of March. Hard to say. You know what, before we go any further, let's take a look and see how we're doing for the 2024 reading. The 2024 reading was created on July 25th, 2023 at 10:53 p.m. Eastern Time. So we got highest high thus far in January and a notable decline starting at the beginning of January, taking us into a lowest low on the cusp of January, February. We have all of that there. The highest high in January or lowest low in February. It's almost as though this high here we're revisiting an important opportunity here from the end of 2023. And then in February, at that low, there's opportunity, and we have a pretty big move off of the lows. It starts out with a little bit of a move like sideways to the upside, and then there's this big move into a high in March with a sharp drop. There's a sharp drop. Then there's another big move higher, and then, so we have a sharp drop, big move higher, and then another sharp drop. So we probably see another highest high thus far for the year, and then another big drop, not necessarily to a lowest low, but a pretty significant move to the downside. Looks like it turns into a lowest low there in April. This is a pretty solid reading, though. I gotta say, guys, pretty solid reading. If you're interested in the paid version, it's a really great way to support the channel. What you get is the actual timing that we see of the best trades throughout that reading. We'll also include what type of chart behavior to look for as far as entry and exit into and out of those trades, what trades to avoid on the chart, and possibly even some price level information whenever we're able to extrapolate that information, all in the paid version. Super helpful information that you won't find anywhere else. And you get the paid version on our website here under our services, SO Meta Posts. Scroll down to 1 year report, click here to order. You can get a custom report here by clicking here. You specify the year that you're interested in. We're about to get rid of 2024 as an option pretty soon. And then you specify the crypto or ticker symbol. If it's crypto, please specify that it's crypto and add to cart. Great way to support the channel, my friends. I definitely know the names of people that order these, and every time we have a new person that order these, they become a repeat customer. People that return to our website are 3 times as likely to purchase something as people's first visit. Why is that? Because the information can't be found anywhere else before the time frame that the reading is predicting. And also, there's a couple other options that may be a little bit more inexpensive for somebody that's like really into 1 years. You can go to our services, SO Meta Post, and get our top end subscription, total access right here. This is a monthly subscription. It gives you access to all of the paid versions of the monthlies, as well as all of the paid versions of the 1 years that come out. So any customs that we do that other people order, as well as any one-offs that we put out throughout the month, and then any monthlies that we do regularly, or if they're one-offs or they're customs, those paid versions as well are in the total. It's a really great deal considering the price of the monthlies alone is $4.99. And then the last way that you can get some paid versions of 1 years is to choose one. These are the ones that have already been ordered. They're slightly less expensive. We've already done these. And with that said, let's get back into it. All right, so in early April, we have a decline that increases with momentum moving forward in time. It may be that we're declining out of that reversal in March, declining into early April. And then it looks like out of the decline, there's the beginning of a really significant rally on a 1 year chart scale. It starts in early April out of the decline. The April high forms when we have a prominent move higher into a key resistance that we failed to break through many times before. It's that resistance level of the theme card indicated by the orange correlation. So we have a prominent move into it, hitting the high, and then a full retracement of that move back down. The low for April forms when we have a failed attempt to break through key resistance followed by a decline through key support. And then in the later part of April, we have out of a decline, there's a big move, an unexpected move, and a big move to the upside. And it's even in the face of seemingly really negative technical analysis or overwhelming headwinds. So there's a peak in the later part of April, and then we have a sharp drop on the cusp of May within a period of sideways fluctuating decline, and then that turns into price swings. So we go from this peak at the end of April into a sharp decline, creating like a trough there on the cusp of April, May, and then that sideways fluctuating decline with the sharp drop in it, it then turns into a notable rally in the midst of price swings, and we visit that resistance level that we failed to break through many times before, again mid-May, in the midst of price swings at the May high. And then from that May high, we have maybe the middle part of May or the later part of May, we have this U-shaped dip, we decline out of a peak, and then we have a prominent trough in early June, followed by a rally back into a high, and it's possible that the high here in June is a higher high. It's very likely that we have an all-time high here in July, and I'll get into why that is in more detail in the paid version, as well as price level information. But we have this like U-shaped bottom of the trough here in early June, and then we rally into probably a highest high, the same high as May or a higher one. There's a trade opportunity in early June. There's a trade opportunity at the May low. There's a trade opportunity at the June high and late part of June and the June low as well. A lot of trade opportunity here I'm going to talk about in the paid version. The later part of June, we have a decline that offers trade opportunity for a pretty quick, like multi-day swing trade, not so much a multi-month in here in June I'll talk about. And then behavior around the June low, we have like an important high within close time proximity, maybe even like a new high or an all-time high, just an important high of some kind on a 1 year chart scale minimum that's highlighted there near the June low, so within close time proximity. And then we've got that fool card for July. Fool card indicates when we look back, when it's 2026 and we look back at the 2025 reading, we'll see that the movement there in the early part of July offered a really, like probably one of the best opportunities of the year of 2025. And again, I'll talk about that in more detail in the paid version, but there's a significant move there and a lot of volatility, price swinging, it looks like. We revisit a support level at the July low within a period of sideways rotation and a sharp drop that stands out in that period of sideways rotation that takes us to revisit a support level we recently met before. There's a peak, a July peak in maybe like the second week of July, and we have a rally that kind of like turns over. It goes like this. Near the July high. Behavior around late July, we have bumping along resistance sideways. There's a notable cross-reading congruency I'll talk about in more detail in the paid version, and we also have a prominent low there, probably a lowest low thus far as well there in July. And then we have a brief peak in early August that forms, and it's easily missed, and it's followed by a decline through multiple support levels. The August low forms from an overbought peak that we sell off from through multiple supports. The August low forms when out of a decline. We have the end of the decline marked by a big move, a fast move higher taking us into the high. And the later part of August, which is probably where the high for August is a sideways fluctuating, sideways S formation within a channel. So we decline from a resistance, meet a support, return all the way back to resistance, and then we reverse and return all the way back to that support again, creating a sideways S formation. We have that same resistance level highlighted again in September, the resistance that we failed to break through many times before. There's also a really sharp decline here to a key support level on a 1-year chart scale that's highlighted around the September low after a big decline into it. I'm advised to be cautious around the later part of September. There's a high, probably a highest high. It's either the same high that we had in May, June, or it's a higher one. And I'm advised to be cautious. There's some sort of chart behavior in the later part of September that might make you do the wrong thing. We have a high and a low really close to each other. It looks like a high and a low on a 1-year chart scale. A highest high and like a significant low on a 1-year chart scale, both in like the 4th week of September or right around the 4th week of September. We have sideways fluidity in early October, equal amounts of bulls and bears inflow and outflow moving sideways along key support on a 1-year chart scale. The October high forms where we have a prominent move higher followed by a full retracement back down. The October low forms within close time proximity to a prominent peak on a 1-year chart scale, and it's an important trough on a 1-year chart scale that'll stand out there in October. The later part of October, we have a near overbought crest or peak that we sell off from through multiple support levels. Early November, there is an important resistance level where volume kind of like flattens out around this resistance level in the earlier part of November, and then we're bound by the upper end of a range, or the upper end of a significant range is highlighted, I should say, around like the later part of November at the November high, within a period of erratic behavior back and forth through the same price level, where we revisit a crest that we recently met as an opportunity. So probably the same high that we saw here in September, we see in November. There's also that resistance level highlighted in November that we failed to break through many times before. So you know what? These are probably the same highs because of that resistance level that keeps getting highlighted. Also in that erratic behavior in November, or on the cusp of November, December, we have another lowest low. There's multiple failed attempts to break through key resistance within close time proximity to the November low. And then the lowest low there in November, December, and early December, there's a important support level on a multi-year scale that's highlighted near that low. And then an unexpected move off of the low, move into like possibly to another year's high. The December high is within close time proximity to a prominent trough, and then opportunity to trade near the December high. We'll talk about in more detail in the paid version. We have another sharp decline in like the 3rd week of December with a trough there, and then the halting of a bullish trend in later December marked by a sharp decline through key support. In 2026, there's an important technical price level on a multi-year scale that's highlighted. That's all I really got for 2026 for you. But that's TIFI token for 2025. Let me know what you think by hitting that like button. Please subscribe if you haven't done so. It really helps out the channel. Most importantly, make sure to follow that rule of karma. You know where to go. You know what to do. Blessings to all my angel investors. I'll see you on our Discord channel only for repeated angel investors. And stay tuned if you got the paid version. Later.